Greetings, I am Taylor Rozier, and me and 3 other external auditors and I of Ernst & Young have basically conducted an audit for Walmart. And in this audit, it was planned with the attitude of professional skepticism in all aspects of the performance and engagement. And we just wanted to make sure that we recognize the possibility that material misstatement could exist. I hope whenever you receive the engagement letter, the cost was reasonable due to the amount of substantive testing, and I gave you a ground understanding of just some of the work and tasks that I will be performing, so there's no misunderstandings. Whenever we were looking at the engagement risk and the acceptability, we evaluated acceptable audit risk by the following factors. The first was the degree to which external users rely on statements. The second was the likelihood a client will have financial difficulties after the audit. And the third was the auditor's evaluation of management integrity. Since we deem the engagement risk low, we strongly believe that there will be no harm from this engagement. However, with having thorough knowledge of Walmart's business and industries to better assist ourselves in finding material misstatements, we got to understand the prevalence of the information processing systems, global operations, and the intangible assets complexities so we can further provide better consulting and other services that you guys deem fit. Knowing that Walmart is one of the major players in the retailing industry, along with Kmart and Target, it has garnered enough powers to negotiate its prices with its suppliers like Kellogg's, Coca-Cola, Pepsi, and so on. And Walmart's main objective is to deliver a seamless shopping experience at a scaled through price. And over the last 3 years, because of this objective and the whole transition around e-commerce, it's actually projected, it's actually increased sales. And although it takes a lot to understand the business, as an auditor, now I must go in and identify the internal and external forces that can influence the forces for Walmart and its global operations, like their locations in Europe, Africa, and Asia. Some of the inherent risks my team has discovered related to external factors are the innovation and adaptation of technology to the industry, new tax reform legislations, and changes in the consumer buying trends. Some of the key risks and concerns that my team evaluated over the last couple of years is there's a major decrease in consumer disposable income. And if disposable income decreases, Walmart may have less money to spend and save. And then this will then force Walmart to consume less and become more frugal. And even though this account can fluctuate with the economy's performance and unemployment rates, this is of high significance because if revenue in the department drops, then Walmart will not be able to meet investors' expectations, and the business as a whole can face possible downturns. Another thing is tax reforms have also impacted a lot of Walmart's consumers by removing personal exemptions and itemized deductions. With each presidential term comes new tax reforms, and with those new tax reforms, if taxes become too high, then this could mean Walmart would not meet revenue expectations, and this could also hurt the overall performance of the company. Another important factor to consider whenever looking at the overall business is Walmart's business process and how that may be affected by risk. And during our audit inquiry, we became aware of various risks in some of the Walmart's processes. And with those risks, we've listed out a couple of internal controls that could possibly prevent and detect those risks. Whenever thinking about the core process, the main thing that I emphasized on was financial and treasury management. This is a big account because it affiliates with the activities of dealing with cash-like payments for goods. And as it's my job to make sure everything's properly recorded as far as the receipt payment, information pertaining to the customers, and so forth. And with this process and looking at some of the day-to-day operations of Walmart, as far as looking at risk, the main thing that I think about is credit cards. Credit cards are so risky because if steps are not properly put into place upon approval, then the company basically will not collect on that debt or that loan that they've lent out to their consumer. And another possible risk is the likelihood of employees taking that credit card information and creating a fraudulent credit card without the customers or consumers' consent. And these are just some of the options that weigh in as us auditors are looking at the whole overall operation processing systems. And as an auditor, me and my team, we went back and observed and reperformed some of the sales discount processes of the internal controls. And although everything seems to be working out properly, me and my team discovered some possible internal controls that may prevent future implications from happening. Like with the whole credit card, customer taking credit card information, we can instill that with every customer that comes in, that they have at least 2 credit reviews. And as far as employees taking consumers' information, allow social security numbers to be required, and upon approval they have to have a photocopy of their ID, so there's no enactments. And another key thing that we saw is not only do a lot of your employees have access to information pertaining to confidential information, on top of they have access to just sensitive information overall. And some key controls that we think that can be implemented is, if you're going to have social security numbers and sensitive information that's not protected, then at least require the social security numbers to be masked before entry of the company. And on top of that, allow for documents in the system to have limited access to the employees, so there's no fraudulent transactions or any possible fraudulent activities that could occur within that process if all of these steps are inputted. And another main thing that me and my group identified is the vendor invoices haven't been paid in a time enough manner. And another internal control that can be implemented is make sure that there's an alert function that is shot to the AP clerk that reminds them that the invoices are approaching their due dates and should be paid in a time enough manner. That way Walmart's profit margin can continue to grow. And some of Walmart's inherent risks that I talked about that arose as far as external factors were mentioned earlier, but now I want to dive a little bit into some of the inherent risks that arise from internal factors. And some of those factors are non-routine transactions related to natural disasters or acquisitions of the company, obsolescence of inventory, and even theft of merchandise. In 2018, Walmart had various acquisitions, and Walmart acquired bare necessities to help enhance its e-commerce platform, as well as acquiring Corner Shop. And since Walmart stores are involved in a lot of cash and credit transactions, the volumes of those transactions as far as the cash and accounts receivable are very highly susceptible accounts whenever looking at the overall process. And since Walmart has so many stores, and of those stores has so many different product types in those stores, supply chain is very important to Walmart's business model. And overall, as me and my group try to assess the inherent risk of this audit, we assessed it as medium due to the many acquisitions and the expansion of the e-commerce offerings. Whenever performing preliminary analytical procedures as part of risk assessment to better understand Walmart as a whole, a procedure that auditors like to do is vertical, horizontal, and ratio analysis. And this basically compares Walmart's ratio to industry and competitors' benchmarks to provide an indication of the company's overall performance. And these preliminary tests can reveal unusual changes in the ratios compared to prior years, as well as letting us know the industry's average to emphasize any trends of the ratios that could possibly occur that shouldn't be occurring. And whenever we're comparing Walmart between fiscal years, some horizontal trends that we picked up were there was actually a significant increase in the net sales in 2018 compared to 2017. And this may be from Walmart's new marketing strategies, as well as their improvement on their e-commerce segments. Another trend that we saw was the interest increase continued to decrease over the last 3 years. And this goes back to some of the credit policies that need to possibly go back and get reviewed that I mentioned earlier. Also, another trend that we saw is Walmart may be losing its competitive position in the marketing place because they have lost nearly $5 billion in net income since 2016. And that's a major, major, major deal. Vertical analysis is basically presented as a percentage of sales, and the restated amount is known as common size income statement. And a common size income statement allows me to compare Walmart's income statement to other companies, and as well as to the industry's average. Whenever me and my team were looking at the financial statements and comparing it between Walmart's previous years and other companies' financial statements, we accumulated that the debt to equity ratio is actually low regarding other larger companies. And we think that the company isn't using enough debt that could actually help bring financial leverage and tax savings. And we also think it's a good idea to handle more debt so it can increase the buying power of your company as a whole. And another thing that we were looking at over the 2 years is the cash and cash equivalents has declined from 2017 to 2018. And this raises concerns for risk because the account isn't typically fluctuating, and between these 2 years it has fluctuated drastically. And another thing that has occurred to us is retained earnings from 2017 to 2018 has decreased substantially as well, which means that the company didn't make as much money after everything was paid out from last year. And we want to see if we can enforce some more internal controls that can possibly generate a better outcome within the years. Compared to companies such as Amazon, Costco's, and Target, Walmart's ratio is actually falling below industry's average in terms to liquidity, inventory turnovers, and even receivables turnovers. But one thing that we can actually look forward to is Walmart is above average whenever it comes to gross margins and operating margins, which means that the company is actually utilizing its strong relationships with its suppliers, and it can secure products for a lower price compared to its competitors. Another thing we identified is the asset turnover ratio is actually above average for the industry, which indicates that Walmart is efficiently utilizing its resources whenever generating revenue. And then another account that kind of spoke suspicion was return on equity. Return on equity was actually below industry average. And with this decrease from the prior year, Walmart should actually seek to increase its income or try to buy back more shares to improve this ratio for the next auditing term. With taking a deeper dive into the control and inherent risks, as a team, we both assessed those risks as medium, which gave us an overall confident approval whenever going in and conducting the financial analysis to further support ourselves, because we don't believe that the company will face any financial difficulties within the next year. In this audit of financial statements, we identified deficiencies in the company's internal controls over financial reportings. And a control deficiency exists basically when the design or operations of a control doesn't allow management or the employees working there to prevent or detect material misstatements. And some deficiencies that me and my team actually identified was the company's policies and procedures are not adequate for management's oversight and review for the determination of the company's allowance for doubtful accounts. There are multiple control deficiencies listed in this problem alone, and with that, this actually reduces the chances that the controls put into place will be able to prevent misstatements from occurring on a timely basis. And then with this being a control weakness, we have to question ourselves, and as an auditor, I have to go back through the steps to see is the company actually going to receive payment for the goods that were lent out. And that makes me think about my audit objectives, and with my audit objectives, that's completeness. And with completeness, I have to look at accuracy and then valuation. And valuation is really critical to this account because we have to make sure that the accounts receivable, the sales, and the allowance for doubtful accounts are valued properly to the right accounts. And there's no misfits or fraudulent activities that I deem fit and that might occur in the future. Looking at the financial statement for the last time, there's actually 6 elements that me and my group assessed on a low, medium, and high level of risk. And those 6 elements were actually materiality, transaction volume, susceptibility to loss, accounting and systems complexity, you have judgment and estimates, as well as control environments. And whenever looking at those 6 elements, there are some alarming accounts that actually would be determined highly susceptible to material, and those accounts would be inventory, property and equipment, as well as accounts payable. And right now I'm going to dive into inventory because inventory is engaged in almost every transaction, and it's something that can be easily stolen, damaged, and so on. And since inventory tallies and physical checks on inventory are taken on a regular basis, the control environment and the likelihood of control failures are low. But since all transactions of Walmart deals with inventory, this leads to transaction volume susceptibility to be high for risk, and the increase of materiality because it's the highest portion and the largest portion of the asserts section. And with that, since Walmart uses a straight line to depreciate the value of property and equipment, it's imposed inherent risk in regards to the accuracy objective and the presentation objective due to details needed to describing a property and the equipment and pieces of equipment. And this account should be valued accurately and properly in every procedure and step that's taken, including the account reconciliation process by management. And unless approved by the purchasing department, no one should be able to purchase something. I just want to say thank you for allowing us to conduct this external audit. I'm very appreciative on every experience that I have obtained this year, and hopefully with some of the knowledge that I've gave, you're able to input that into some of your internal controls and hopefully make Walmart a better tomorrow.